Okay, and welcome back, students who are working on the financial accounting chapter 4 exercises, the group B problems that were assigned in the digital study guide. For this, we left off on 31 in the last video, so now we're on 32. And for number 32 here, and 33, which I'm probably going to do 32 in one video and 33 in another, but it's asking us to prepare a single-step income statement. And in number 33, it is asking us to prepare a multi-step income statement. Okay. Now, I'm going to work in 32 here, but when I glanced at the solution, I looked at it and went, if you recall, if you've watched my other theory videos, okay, single step format, if you look at a statement of retained earnings, the way it was presented, everything was in just one column on your statement of retained earnings. Statement, erase that there. Statement of retained earnings. Okay, that was kind of, the information was kind of presented in a single step format because it was all in one column. But when we looked at the income statement and the balance sheet, okay, that information was presented in multi-step. Multi-step, meaning you would end up using two different columns. Every time you have a mathematical calculation, you would go to the left-hand column, you would do the math and write the total in the right-hand column. So you had multiple steps. And to be honest with you, that's the way I learned multi-step and single-step. It had nothing to do with grouping or totaling information. Okay. Now, when I looked at the solutions here, and I'm looking at the solution for 4-32, what you're going to see is you're going to see the information in two different columns. And when I looked at and it's asking us to prepare a single-step income statement. And when I looked at the solution for 33, right, it's asking us for a multi-step, right, and it is being presented in two different columns, right. Now, I kind of got to thinking about it before I started this video, and I went and I decided, well, I mean, these people are accountants, they learn the same thing as I do, and I do disagree with the way some of the information is presented, but that's going to be normal. Everybody doesn't teach everything exactly the same way, okay, but it's based upon the same fundamental concepts. So I decided to go back into the back of the book and look up the definition of a single step. All right, and if you look, this definition happens to be on page 720 of the textbook, and it says single step income statement. Income statement format that groups all revenues together and lists all expenses together, subtracting total expenses from total revenues and calculating net income or net loss without computing any subtotals. All right. So it says it's grouping, revenues, grouping expenses, and calculating without computing any subtotals. When I looked at the definition of multi-step income statement, which is on page 716, they list it as income statement format that calculates net income or net loss by listing important totals such as gross profit and operating income. Right? So what I'm left with here is a slight conundrum in that, yeah, I can do the homework and do the problem as the homework is presented, okay? And I can, in all honesty, just look at it and go, okay, this, and this, and create the create the income statements. But in doing that, I think that's a disservice. I'm not going to, kid you. If you're looking at a small business, okay, small businesses, and I mean a small business is anything that has less than $5 million in revenue. At least that's what's considered a small business by the government. So you're talking, when you're driving by that Marriott hotel or a Best Western, that's a small business, even though it looks like a big building and looks like it's a larger business, right? So the vast majority of businesses are small. When you get down to, much smaller businesses, the corner grocery store, or, some mom and pop businesses, or, contractors, building contractors, or, the handyman, these are all small businesses. And generally their financial statements are very, very detailed. Okay. And as the businesses get larger, all right, even mid-sized businesses will put a lot of detail in their financial statements. But then when you get to really large businesses, that's when they start summarizing information. Now, why do I mention all of this? Well, I mention this because of the definitions that are in the book. Okay. And like I said, I don't agree with this here grouping and ungrouping and picking and choosing. It becomes too unwieldy. And from my experience, working in a CPA firm, installing accounting software across many businesses, it's kind of it's not done like that. All right. So what I'm going to do is, we have the information here, and I'm going to create the financial statements the way I think they should be created, based upon the idea that single step is one column and multi-step is two columns. And we do have subtotals, and totaling, right? And so that's the way I'm going to present the information, as an alternative. I mean, if you get a homework problem, and if you get a test problem that says create a single step income statement, and you do it the way I'm doing it, the instructor is going to give you credit. Okay. To be honest with you, they kind of look at the other instructors here look at these solutions a little bit weird also. Okay. So if you present it the way I present it, you'll get credit. All right. But if you also decide to take the tact of, figuring out and thinking about, the way the solution is presented, go right ahead. Technically, it's all correct, and you'd still get credit. But I'm going to do with what worked, the way have been doing it now for umpty-ump ages. All right, many, many, many years, and I never create ones that look like the ones that are in the solution. So. And I don't know of others that actually do it that way either. So that's the caveat. And so with that said, I'm going to work on this 4-32, and it says prepare a single step. And I am not going to prepare a single step. I'm going to prepare it as a multi-step income statement. So whether you decide to pause the video here and stop and not continue to watch it, that's up to you. But if you do stop, then you just look at the solution and try to match up what's in the solution. But if you do decide to continue on, realize that income statements generally are not created single step. Okay, they're created in multi-step. So here's the data. Okay, and I'm not going to be bouncing back and forth between the screens. Okay. And any idiosyncrasies that I find, like for example here, it says here general expenses, and it says selling expenses. Those are already subtotaled. You're not going to have an account called general expenses, and you're not going to have an account called selling expenses. This 32,400 might consist of 2 or 3 different expense accounts, right? And the same for general expenses. You don't have a ledger account called general expenses, right? So that account might have 10 different expenses as part of that balance. All right. So when I'm going through, I'm going to point out little idiosyncrasies, meaning, as I'm creating my expenses, I'll say, oh yeah, here's the selling expenses. This probably is, a subtotaling of, 5 or 6 different accounts, and work from there. Okay. Now, I'm pointing this all out, and I'm taking this tack because they are giving you, account balances, in general ledger account balances, in a random order. All right, I mean, so this is basically, they're trying to tell you that this is a trial balance, but it's not in order. All right, and of course you have accounts and the balances in the accounts. You never work off of information like this. You always work off of a trial balance. Okay, and this is all part of my not agreeing with, you know, some of the solutions in the textbook. I mean, it's valid to be given, be asked to create an income statement, but I don't think it's valid as a learning experience and being all randomized and in random order and have specific accounts in certain areas and subtotaling doesn't fit well with me. So you have this information in the book. I'm not going to bounce back and forth between screens. I'm just going to go ahead and create the income statement the way I would create it. Okay, and if you watched, since we've done this in chapter 2 and 3, I'm not going to do a lot of repeating here. Okay, I'm just going to end up going and creating information the way I would see it. Okay, so I actually have to, real quick, I have to find 4-32 problems. Give me 1 second here. 4-32. Okay, so yeah, I have the solution in front of me, but I'm actually working out of the book here. All right, so I'm looking back and forth in the book, just as you would be if you were doing it as a homework problem. And again, I'm going to take liberties with formatting in that I'm going to abbreviate stuff like that. Okay, watch the theory videos from chapter 2 and 3 about my thoughts about doing homework for yourself versus creating, classified income statements. All right, so heading is board and furniture. And this is an income statement, and it is for the year ended. So I would put for the year ending. That's the way I would write it. August 31st, 2014. Okay, and you'll know that I always do that first. I put the heading up first, and that's center aligned. And then I like to write revenues as the category of account. And then expenses, because I'm building a framework in creating my financial statement. So now I'm going to fill in whatever I need to fill in with my expenses. Right? So I'm going to fill in whatever I need to fill in for my revenues, and then I'll fill in whatever I need to fill in with my expenses. And remember, I'm creating this as multi-step. Right? So if I have revenues, I need to look at my revenue accounts, and I see that from my information, I have a sales return and allowance account. So I know I'm going to have sales revenue, and I actually do have an account called sales revenue, and that is $249,000. And then I have less, and let's see, I have a return and allowance. Yeah, I do have a sales discount. And that is 1,900. And then I have less sales return and allowance of 2,500. Okay, and remember, by having the word less, that means I'm using a positive number over here. A negative times a positive is a negative, so it's generally understood that we're going to take 24,900 less the 1,900 less the 2,500, which gives me a net sales revenue of $244,600. Okay, now the next thing I need is to take out my cost of goods sold, right? And I can write that as, there we go. less cost of goods sold of, and this gets a dollar sign here because it's the first number, 128,700, which then gives me a gross profit of, I have to do the math here, 244,600 minus 128,700 gives me a gross profit of $115,900. Okay, and dollar sign because it's the first number. Okay, so that's my gross profit, and that's my revenue section. As an aside, all right, my net sales revenue, I should indent that just a little bit better. Net sales revenue. Okay, less cost of goods sold, and I'm going to indent my gross profit here. Notice that as I make my indentations that sort of coincide with the columns that I'm using. Okay. Now, as far as expenses are concerned, let me take a quick look here. I have cash, equipment, common stock, payable. All right, so I have a general expense, and I'm just writing this down just right now, just so I can get my bearings and have the information at hand instead of going back and forth. So I might be moving this information. All right. So I have 13,800. Notice I'm putting it in this column, the middle column here, or the second one over, because I know that I'm probably going to add them up and put a total expense in the right-hand column, so that I have my revenues less my expenses in that final column over there. And so I have a general expense here, salary, payable, supplies, building, returns, prepaid, retained earnings. All right, we took care of cost of goods sold, accumulate depreciation, unearned revenues. That's the liability account, sales revenue, accounts receivable, accumulate mortgage, don't need dividends, sales discounts, case selling expenses. So then I have selling expenses, okay, and they're 32,400. Then I have inventory, and then I have interest expense. Okay, interest expense. Okay, now, two asides. Okay, as I had said, this general expense and the selling expense, I mean, there's never going to be an account called a general expense, okay? And the vast majority of time, you're not going to just make up names and put them on your financial statements. The descriptions are going to actually be ledger accounts, so you're not going to really have a general expense account unless, of course, you know, like I said, you're in this big business and you're consolidating a lot of information. Okay, yeah, you would have a general expense account that would have actually a zero balance in it. Okay, because you'd never ever use that account. But when you have, let's say under the general expense account, there's 20 general ledger accounts which do have balances. Okay, so your general ledger, your trial balance would look like this: general expense, and that would have a zero balance. And then let's just say advertising expense of 100, you know, and oftentimes that might even be a little bit indented. Rent, you know, 1,000, you know, and payroll of 1,500, you know, so on and so forth. And you would know that, you know, that these would be a subtotal to whatever that is. Okay, you know, I mean, you see the same thing with like utilities. Okay, you might have a utility expense, and then underneath utility expense, you know, you need to have water, gas, electric. Okay, electric, and whatever they total up would be the total of that utility expense account, but you would never use that account itself. When you're going to post your utilities, if it was water, you'd put it to water, gas to gas, electric to electric. You wouldn't put it to utility expense. And the same here. Any of your expenses would not be posted to your general ledger account. It would always have a zero balance, even though it's on your it's, you know, on your chart of accounts. Okay, so in this case here, you know, this general expense probably subtotals, you know, a number of different accounts, and the same thing with the selling expense. Now, expenses are expenses, and okay, so that was the first. These two, you know, are probably a subtotaling of other accounts. Now, the second thing I had mentioned was this interest expense. You know, a lot of businesses will, you know, just have their expenses, and part of their general expenses would be this interest expense. So, if they're following along that line of thinking, okay, then there wouldn't be an interest expense account here. That would be, that total of that account would be part of the general expense. So reality is, you know, if they did it this way, they'd only have two accounts. However, when it comes to interest expense, remember that had to do with finances. And in one of the previous problems, I started to explain this concept of other expenses. Okay. If you have your expenses, and let's say you have rent, advertising, utility, payroll, okay? So you'd have these amounts here, okay? And then you would have a total operating expenses, and that would be the total here. So these would go in the left-hand column, and the total would go here in this right-hand column, right? Now, with interest expense, you know, we could stick interest expense in here also, okay? Especially with smaller businesses, that's where it generally goes. But with bigger businesses that do a lot of financing and things like this, the interest expense is not, you know, that's a cost on the money you're borrowing. It's not an operating expense per se, okay? It's not part of, you know, you're selling the product. You know, it's an expense to the loans that you've borrowed that come from your liability section. So the way they have businesses will do is they'll have this here, and then they'll have an other expense, and under other expense they would list interest expense. Okay, so that other expense would, you know, this interest expense would go here, and then they'd have a total expense, right? And that would be, you know, that would be the sum of these two numbers, right? And be put into a third column right here, right? So that's where you'd have your total expense at, right? So realize that when we're looking at the interest expense, you know, two different ways. One, it could have just been inserted as part of your normal operating expense. And for a lot of small business, that works just fine. And instead of calling this total operating expense, they would just call it total expenses. Right? But as it gets bigger, and or they want to denote that that operating expense is a part, that interest expense is due to financing in your liability section, okay, they will break it out and have a section on your income statement called other expense. All right, so notice what we just did. We expanded our expense column. All right, our expenses on our income statement the same way we've expanded our revenues. I mean, originally we had just started out with just sales revenue, okay, back in chapters 2 and 3, okay, but now notice that our revenue section not only deals with net sales, but it includes our cost of goods sold and our gross profit. So we've expanded it, and this is the same kind of thinking with the expenses. We've expanded our expenses beyond a simple listing of our expenses and then one total. Okay, well, now we have a listing of our expenses to get a total operating, and then we're adding in other here, so we're expanding and including whatever that is right here in order to get a total right here, okay, which is what I'm showing here. Here is our normal expenses. That gives us our operating here. Then we expanded this section to include another expense. And other expenses is not just interest expense. You know, you could include in here a miscellaneous expense, and there's other types of expenses that might go under other expense. So just be aware that it isn't just one account here called interest expense. It can include others. But the point here is we're progressing, we're building one upon the other. That, oh, now that you understood expenses, we're expanding the expense section to include other expense, and then of course we have a total expense which includes our operating and our other. Okay, so if you're, like I said, I'm not being results oriented by looking at the solution. However, I did take a look at my accounts here, and that I see I have an interest expense account. Well, what am I going to do with it? I can treat it one of two ways. I can stick it here and call this 8,300, and then have a total expenses, which would then be, let's see here, 13,800 plus 32,400 plus 8,300, which would be 54,500. And then, of course, I would have my net income of 115,900 minus the 54,500, which would give me a net income of, come on here, 61,400. Okay. Let me take a quick, oh, I'm sorry. Wrong, I used the wrong number. All right, not 8,300. Sorry about this. Used the wrong number. Interest expense was 1,700, right? So 13,800 plus 32,400 plus 1,700 is 47,900 minus 115,900 gives me 68,000. Dollar sign, 68,000, double underline. Okay. Put my commas in the right spots here. Okay. And I ended up with 68,000, double underline the end of a calculation. So I have a profit of 68,000. Now that's one way of doing my expenses. Okay. The other way, so pause and write this down if you want, okay, because I'm going to erase it here. All right. The other way of doing this and I'm going to do it in blue to represent the difference here. 13,800, 32,400. Okay, so that gives me my total operating expense of, let's see here, that's 46,200. Then I would have, I'm sorry, that would be indented just a little bit there. Okay, and then I would have other expenses, and underneath that I would have my interest expense, which would go here of 1,700 and gets underlined, and then I have a total expenses, which would be the let's see, 47,900. Okay, and then underline, and that's would be here my net income, which would end up being the 68,000. Okay, so as you can see, it's being done two different ways. I mean, again, if I had just did it the way it was before, where I had just included the interest expense as part of my expenses, okay, that would have been the thinking previously. But we're expanding our thought process, and we're expanding, the concept of how to record information underneath our expenses. And that's what you're looking at right here. You're looking at this information being presented in a little bit different light. Okay, neither one is right, neither one is wrong. It all depends upon how you want to view the information. Okay, and but based upon the way the data was presented here, I'd have a tendency to believe that they would want the interest expense as an other expense, since they did not include it as part of the general or the selling expenses. So in that case here, I would end up creating this financial statement looking like it does right here. Okay. Right, so that's it. Double underline down here. Okay, and I realize that was a long video, but you're gonna, it is what it is, and I hope you got something from it. If not, if you're not understanding something, go back and watch it again. If you have any questions, feel free to call and ask. Okay. Again, 30 problem number 33 is going to be very similar to this one, so just be aware of that. All right. See you in the next video.